Good day, guys. So this week, there's one clear investment theme that takes the cake. But don't eat the cake or you'll die, because it's yellow cake, uranium. So uranium has been going through the roof after the Sprott Physical Uranium Trust has entered the market and is buying up all of the uranium off the spot market and forcing up the price, which could continue to happen unless someone dumps a lot of uranium on the stock market to bring down those prices, which is unlikely. And now the key news is that just recently the Sprott has announced that they're going to boost their fund by an additional $1 billion. So they want to buy another $1 billion of uranium off the spot market, which will further drive up the uranium price. So uranium's already at $42 per pound, which is quite an extraordinary rally for uranium in the short term. Now, we've seen today and in the last week that all the leaderboards for market movers have included uranium stocks. Dozens of uranium stocks all going through the roof, especially the small caps, which have been going up by over 100% so far. And it's quite crazy because a lot of these small caps are trading above their NPV values from their feasibility studies. So for example, you got Peninsula Energy and Boss Energy, which are trading double their net present values as they've calculated in their feasibility studies, which were based on a higher price of uranium. So that's quite spectacular. Whereas you've got small caps, which are trading at significant discounts to their potential valuations. So why these stocks could be trading above their projected valuations? For a start, well, obviously you've got bots. So obviously the bots will jump in, see bids coming in, and they're based on algorithms. These will just price indiscriminate. They won't care about, they won't have any idea what the valuation of the company is. The algorithm is programmed to just buy stocks as they're on the rise, and then sell them. So that's obviously a factor. But another big factor is that the market for uranium stocks has drawn a huge amount of attention. So everyone's trying to jump on board of this rally, and there's limited choices in the market. So you've got a few key players. You got your big names, which is Cameco and Kazatomprom. But even those are quite small market caps, like $10 billion kind of thing. Whereas in other industries, so copper, gold, and that sort of iron ore, you've got thousands of choices, thousands of different stocks that are prospecting for gold or developing gold or mining gold or copper, you name it. So there's thousands of options, and their total value of those markets, of those producers and developers and explorers is, in the billions, trillions even. So whereas in the uranium market, you've only got something along like 66 pure play uranium stocks worldwide. Then obviously you've got some more uranium stocks that are, working on other projects as well. So they're not pure play, but there's still a very limited amount of uranium stocks to choose from. And a lot of those ones are on the ASX, so the Australian Stock Exchange. You've got the American stock exchanges for some of those American producers, and also Canada. So the TSX, very popular stock exchanges for uranium stocks. And that's where the, global attention is going to be drawn. So you may see on the ASX, for example, a lot of Australian investors. But now with the rally in uranium, you'd be seeing a lot of international investors piling in on low liquidity ASX stocks and penny stocks and driving the prices up. as demand for the shares increases as the rally continues, especially given that the rally in uranium isn't a new thing. There was one before, a big bull run in uranium between 2004 and 2007, in which you've seen stocks like Peninsula Energy climb up by 700 times their value, so like 70,000% in just a few years, 3 or 4 years. So was a quite remarkable rally, and obviously investors are looking back at that and they're saying, can this be the same rally? And if so, they want to enter in now before it's too late, and the prices could go up, could skyrocket, especially with the Sprott basically just continuing to expand its purchases and consume all the uranium off the spot market without any concern about what the price of that uranium is. So basically it's kind of like market manipulation or price gouging or hoarding of a commodity, kind of like what we saw with the Hunt brothers when they cornered the silver market, except that was individuals, whereas this is thousands of investors with a investment vehicle that can afford to corner the uranium market. So that's why a lot of people are getting very excited about the opportunity that is presenting itself in the uranium market. So let's get into a few stocks. So first of all, I'll be focusing on ASX listed small cap uranium miners that might be worth considering, and I'll delve into a few of those. Okay, so the first stock that I'm going to cover today is Thor Mining with a $26 million market cap. Now, I'm currently looking at their investor presentation, and I'm going to go through it as I break it down. So they've got a copper project in Australia, a uranium and vanadium project in the USA, which is the highlight, obviously, with the uranium theme that we're talking about at the moment. They've got the gold project in Australia and the tungsten project or tungsten projects in the US and Australia. So now the exciting part is uranium drilling. So this is I think it's their July presentation, which is fairly recent. So the key point that I can see here is drilling adjacent high-grade historical production, and drilling is scheduled for Q3 in 2021. Guess what? It's Q3. It is Q3 in 2021 right now. So, Q3 is obviously the time to be investing in Thor Mining. That's pretty obvious according to this report. So obviously we've also got here they're drilling for gold as well. Their maiden drilling program Q3 2021 for their gold project in Ragged Range. Now that's quite exciting as well. So there's a lot of excitement going on here. I'm excited. Investors are excited. 30% today. Wow, that's a big move. That's pretty good. Especially with a company as small as this, you can see some real momentum. Okay. Keep in mind though that 20 cents? Let me just check I always mix up 2 cents and 20 cents. Okay, 2 cents is probably going to be a point of resistance, but with the uranium rally, I'm hoping that we can break through 2 cents. Okay, so Elfit East, that's their main copper project they've got going on at the moment, and they have an 80% interest in that one. So they've recently drilled that, and they've had high-grade intercepts, which were very exciting. They've also got the Enviro copper project. Okay, so I guess I'll follow the presentation's order, get to the uranium, save the best for last, I suppose. They're talking about the gold project. So, a large copper gold oxide resource constrained within a structural corridor. Now they're going to use in situ recovery, which you might have thought, well, in situ recovery is used for uranium, but these guys are going to use it for copper. And obviously that's going to be one of the cheapest possible ways to mine copper, and they believe they have the right geological setting there to use ISR for their copper. So, that is great news. If they've got a large resource here and they can use the cheapest form of copper mining there is to get this copper out of the ground, copper and gold, that is a great outcome. They could make a lot of money here we could make a lot of money here if they ever switch this project on. And recently I had 70 meters at above 1 gram, at above 1% copper. So 70 meters at above 1% copper, that's a pretty good intercept. So this ISR can recover copper at much lower concentrations. So this is a good grade. Okay, so far their resource that they've estimated, obviously this can be upgraded substantially, is 100 kilotons of copper and 57 kiloounces of gold. But I do believe they're trying to upgrade that, of course. So diamond drilling commenced in June 2021. We've recently seen an intercept from that that they've published. And now the Ragged Range Gold Project, which is 100% owned by the company. So, you'll see some really good gold in pan assays up to 2.2 grams per ton AU. And, they actually did some actual panning for gold, and you can see the gold in the pan. You can see gold flakes and basically gold flakes and gold dust in their pan. So obviously there's visible gold out there, and fine grain and coarse grain gold out there. So hopefully when they actually get around to drilling this, which apparently should be coming out very soon, is good. Hopefully they find some gold. Okay, now here we are with the US uranium and vanadium, which is 100% owned, so that's great. So now this is in an excellent spot within southeast Utah and southwest Colorado in USA in the Uravan mineral belt. 400 kilometers southwest of the city of Denver, sandstone filled paleo channels. Now that's great because a lot of your uranium worldwide is mined in sandstone filled paleo channels, and that's where you can use the most cost effective mining technique for uranium, which is in situ recovery, ISR. Field sampling returning high grade uranium of 1.25%, triuranium octoxide with 3.4% vanadium pentoxide. So they're really high grade samples. So that's excellent. And this is very close to historical mines that have operated in the region. And nearby infrastructure, they've got a processing plant with available capacity. So I believe this is, I'm pretty sure this is quite close to the Delecta. Now, obviously, check out Delecta as well, because that's obviously as well, it's a small market cap, and they're in the vicinity, I believe, and they're also near this operating uranium mill. So they're close to infrastructure that can be used to exploit this uranium resource. All they would have to do is dig it up and send it there, basically. or in situ recover, whatever the mining strategy technique that they adopt. And yeah, so basically they said this processing plant has, spare capacity. I believe in the director report, it said that, it has 90% spare capacity or something along those lines. So that's pretty good. And obviously mining in the US, they potentially are eligible for the government purchases for the strategic uranium reserve, which Donald Trump attempted to implement, and presumably that's still going to go ahead. So having vanadium is also as a co-product is also quite good because vanadium is part of the green energy revolution with growing demand for use in vanadium flow batteries, VFBRs. And here we are with the final one, the Molly Hill Tungsten Project, 100%. So recently I believe I heard them saying, I might have been listening to an interview or something, but I do recall them saying, management that is, that that they were planning to switch this one on within 6 months from when the price got right, and I believe they quoted $300 US per ton for the tungsten concentrate. So probably maybe that's the APT. Permitting status, fully permitted for development. So yeah, Molly Hill, that's good. They've got shear, did I say that right? Shearlite and molybdenite. So perhaps part of the reason as well why they might have gone up 30% today is obviously you got that announcement about the director and the chairman or whatever. But I would also look at the market as a whole, because when I go through when I look at the market, I look at every single announcement basically, and the relevant announcement I think that was today is probably King Island shearlite, which is the same ore here. Shearlite. Did I say shearlite before? I don't know. Who cares? Basically they've signed an offtake with Traxys for that tungsten concentrate ore, and perhaps that's rolling over to Thor Mining, probably more so just the uranium thing, but you never know, because I would look at that as favourable. I'd say that indicates there's demand coming on for tungsten, and if they switch this on, obviously this company gets re-rated and goes from a 2-cent share to a 20-cent share or something along those lines. Easy 10 bagger if they could switch this project on, potentially. And then if they switch on Elfit East, their copper projects, and if they find uranium, for example, if they find a good intercept of uranium in this drilling, that could be hugely substantial. So this is a potential multi-bagger stock, and it could be very quick as well, especially if they find uranium, if they hit uranium when they drill, and provided the uranium continues to go up, and they hit uranium when it's at a high price, you could see it skyrocket on that discovery. So obviously, this is one of the higher grade, tungsten mines out there. And it also has molybdenum. Now, if you look at the price of molybdenum, Molly's very popular at the moment. It's gone up. It's basically doubled in recent times in value. So you've got very, very significant molybdenum credits here in this project. So I really hope they can bring it on, because now would be a great time to, bring on this project where molybdenum is high and tungsten has now approached a good price. So there's a good recovery in the tungsten price, and that's very significant. Okay, so that sums up Thor Mining. I think we got a potential multi-bagger there, especially if they do make a uranium discovery in a proven uranium location where they're planning to drill. Now, the next stock that I wanted to talk about is Havilah Resources.